Hi, my name is Felix Fry.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Fry, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. Hey, buddy, how are you?
Hey, Felix. Good. How are you? How's it going?
Good. Thursday already, huh?
Yeah, already. Yeah,
all right,
and Mondays, the market's not working, so
the market's not working. That's a good way to put it.
Right.
What are you seeing? What do you got?
Okay, so actually, I've been looking through and seeing some Nokia, which is pretty interesting to me.
Nokia?
And Nokia, NOK. You guys can also check it out on the tools, and let me actually share my stuff so you can see it.
That reminds me, by the way, of like the flip phone Motorola. When I hear Nokia, I just remember it was Nokia and Motorola, and I used to have that flip phone thing. Okay, anyway, go ahead.
Yeah, I mean,
I had a Nokia too, by the way. But
when I was a kid, I had a Nokia. I love that.
Do they still do phones?
I don't think they do phones as much as they do some 5G stuff. So that's where the story gets interesting, right? Okay. So here, looking at Nokia.
Okay.
And my question then goes into long-term investing with options. So I'm seeing 2022 and 2023 options. The 2023 ones look more interesting because you got 2 years and there's some volume here sparking up.
Yeah.
And the target essentially is $7, which, I mean, from 4 to 7, it used to be a $60 stock back in early 2000s. I mean, with phones, they're never going to get there. But
so what is their
Right. I've started seeing some deals in Shanghai. They're doing some stuff. Singapore, in the US, they do some 5G stuff for T-Mobile. So they're going all over the place. They got some cybersecurity project from the government. So, I mean, if these guys are serious about that stuff and that stuff is the future, there might be some action there. So, my thinking here was let's look at $7, for example. That's a 70% move in the stock, right? But if I click here on the eye, that's 173% move in the option if it actually gets there.
Okay.
So, I'm thinking, you can throw $1.10 and, have 2 years to see what happens.
Sure.
It doesn't sound like a bad deal to me. So that's why I wanted to ask you, what do you think about it?
Okay. I mean, I'll show you my screen. You want to see my screen? So,
okay.
I guess what I'm thinking first and foremost is that it's a $4 stock. Like in my mind, I'm thinking it's an option already. $4 is an option. But that said, I do see that people they're buying options here. I mean, so I can't argue with that. So if you're looking at this, the 5s, the 7s, the 10s, I don't know exactly when they bought them. I would have to look historically when they bought them. They might have been sales, and we don't know that. But, selling a 2-year option at 20 cents is generally not what people want to do, right? You're literally sitting there for 2 years with a 20-cent option. It's generally what people want. So I suspect that, yes, they're probably buying 5s, 7s, and 10s. I suspect that that you're right about what you're saying, that they think it's got to go, my guess initially was just 7 or call it $8, $9. Yeah. So it gets you right around that area in 2020. That's 1 year. In 2 years, you would have to be around, again, the $7, $8, $9. So I would think that someone under $5, I'm not sure if a lot of these places give you 2-to-1 leverage on stocks. So I'm not sure you can get 2-to-1 leverage on a $4 stock in, say, an E-Trade or TD Ameritrade or Robinhood account. But $4 is an option, so that's one thing. But they're not buying that, and I think what they're probably saying is, look, it's either going to work. What are they getting? They're probably getting to 5G and all that other stuff. Is that the story? So so 5G is coming out. It's not completely advanced. If we go from here to if we go from here to sort of some bigger area where 5G is, what's exciting, and then everybody's looking at the 5G names, it might not happen in a month, it might not happen 6 months, it might not happen in a year. But if you have a 2-year option at $4 for $1, these guys are saying, well, if that does happen and 5G takes off, then it's a double. and I can be long $4. I can long 1 million shares at $4 or 10 million shares at $4. It's 40 million. Or I can just buy, 10,000 of these calls for, so what's that? 4 million shares, 40 million. Sorry, 10 million shares. So I would have to buy, that would be 100,000. So let's call it 50,000 of these options for $1. And it sort of gets me the same thing. And I'm putting a lot less money, but I have to think that it's going to 7 or 8. Otherwise, it's really not really worth it, or maybe 10 or higher. So, yeah, I mean, it's interesting. I mean, it usually, I guess the first point is that in general, we're using options for anywhere between 2 weeks and call it 6 months. In general, most people are using options because of an event. Most of the big guys, they're an event, they're targeting that. But there are plays where 5G takes off and Nokia becomes popular again and it's a $10 stock and you just want to sit on it. Somebody has done the math and says, if this happens, then Nokia is a $8 to $10 stock. And we don't know if this is going to happen, but for $1, I'll pay to look instead of putting up, like we said, $40 million to buy 10 million shares. I'll just buy 50,000 calls and I'm going to get closer to the same risk reward and actually do better if it gets, if it goes, the higher it goes on a percentage return. So something like that, I would say, yeah, it's fine. And if you're seeing the options, then they clearly think that the opportunity is more long-term because NIO has been a disaster for however many years. It's traded down. Nobody's looking at it. It's probably still, even at $4, it's got a decent market cap. So let's just, I can look at, what is it? Nokia stock market cap. Market cap is $23 billion. So it's still, it's still a big company. It just has a small price. So I would say it's totally fair. It's a long game. It might be one chip that you put in there and sort of say, I'm not going to look at this for a long time. And it's either going to happen or it's not. 5G or whatever it is that their business is going to happen, and then it goes up. But yeah, so I would say it's valid. I would say I have GME up here, which is, we got to get to that later, but I would say it's valid. But it's a longer term play, and you got to have the mindset for a longer term play that in 6 months, if the stock is 350, that doesn't mean anything, because if it happens, if 5G and they become a bigger player and 5G happens, then it's an $8 stock. We don't know when that if is, and it might be 2-3 earnings. You might be sitting on it, and then 16 months later, you get tired. You're like, you know what? $1 went to 50 cents. I'm gonna just get out of this. And then in the last 4 months, you have to see how these things go because of a trend that goes up. So it's really a long, the people who are doing this, they have a long-term mentality. They have patience and they know what they're buying and they're going to wait and be patient. If that's you, no problem. But I find most people after 4 months are like, this isn't moving. It's clogging up my money and I just want to get out of it.
Right.
Okay.
Makes sense.
Yeah. So that's something that I would look at. So, but it's interesting, look, you can use options for long term, short terms. It's always going to be about risk reward. So what I'd say, let me give you another example here, because well, you were saying something about GM that you had sold it and you were excited this morning. So, but then why don't you talk about your?
Okay. Yeah, I can say a little bit about it. So we had in the Winning Picks Premium, we had a GM call that you sent out.
Okay.
I made over, so I only had one position. I made over 150%. So I was like, I'm just gonna get out. I wish I had 3, so I would do, gradually, because I think it can still grow.
Run.
Right?
You think it can still run?
Right.
Okay.
It can still run. So what I was thinking, when looking at DOA, I found January 29th.
Okay.
If you want to take a look at those. And
Jan 29.
Yes.
Okay.
$52 calls. Right.
Okay.
So I saw 11,000 at this point. You see volume, looked like buying in the morning when I was looking at it. And I just figured,
So you got out of that, and you got into this one.
Yes, exactly. Okay. So what do you think about that? Is there any other alternative I could have done? Or
listen, I like it. I think buying a one lot, that's obviously a smaller account is different than a bigger account. A bigger account allows you to sort of do what you said, get in easy and then get out easy. The one lot causes you to be right on the open and then right on the close, and it's very, very difficult. It's almost impossible. Okay, so what you are experiencing is the pressure of, do I take the 150 or do I not? I'd like to let this run to 400, but I also don't want to write it back to zero. And so, that thought process is in a lot of people's minds. Always, we try the bigger the bigger your stack, the bigger your account, the less we try to I make you think. I try to not have you think so much about that. The minute you start thinking, where's it going? I have to tell you, nobody knows where it's going today, tomorrow. We could sort of have an idea, but nobody knows. What we do know is risk reward, how much we have on the table, how much we can make. And so that's what we're working with. But the minute you stop from, or you go from one realm of talking about risk reward to the other realm of where's it going next, you sort of get into a little bit of the day trading mentality, which is a tough game. It's a tough game to play. And so what you did, I like. You said, I want to take, you have no choice but to sell the one that you have. Right. So you take the one and then you find, so why did you pick this one, by the way? Why did you pick?
Because I've seen some volume. Right.
Okay. Yeah, I do see it as well. It is. Okay. So where'd you sell the other ones at?
680, six something. I don't know.
Six something. Sure. Okay, so let's call it $7. 680, $7, right? And these are going to cost you $1.75. Okay, so what you did was, I like it because you took off $6, and then you just said, you know what? Here's my 178, because if GM goes up, we expect it to go up a lot. So if I have 2 more weeks, that's great. The one thing I would say is that you didn't really take the earnings. So the earnings is really what we think might be the event that sort of unravels this new story, or something is said by the CEO that maybe they spin off the cruise or they spin off something. That would be a very, very big announcement, and that would make it go up a lot. That said, that doesn't mean it's bad what you've bought. You're going to have to pay more for the earnings.
Keep in mind, I only took one of these just to kind of see what would happen, right?
Yeah,
so
no,
about getting in more, right?
Of course. But what I'm saying to you is that the earnings is sort of the event. So if GM just starts, it's already made a $10, $11 move. If it starts dribbling higher, then and not moving quickly, then it's going to hard to win, because you have one bad day and it may not get to more than, you hit 100% one bad day, and this thing is going to be 50 cents as you get closer. You now have 11 days left, or 10 days left with the Martin Luther King Day. So I would say that there's nothing wrong with it. I like it. What I would say, and I have been telling people, is to in this case, you might do this. You might, because I'm looking at it, you see how there's other activity up here? Some of this is probably some sales here. Okay. So what I might look at is, I might say, I don't mind buying the 52s, but without earnings, I can reduce this cost even more by selling the 56s. So if I buy the 52 calls for $1.75, call it, and I sell the 56s at 75, somewhere around there, just throwing out numbers, it's about $1. Okay, so now that 52-56 call spread, now we're getting to call spread. It's a little bit different than just the buy, call, buy, put. So you have questions after, go to 3 steps, step 7, and I talk about call spreads versus just calls, okay, and when you should use them. This might be a case where it's interesting. Now, one thing I would say is, most people don't look at this, or they kind of don't know how to maybe read it. This is fun to look at, but when you see this sentiment, bull, high, that means calls are relatively valued higher than puts, relatively. Okay, that means it's skew. This is the concept called skew right here. For 3 months, 1 month after money applied volatility is generally high. Okay, generally relative historical. So what sometimes in that scenario, when this is high and this is high, that means volatility is high and the upside calls are well bid. Then what you might want to do is a call spread here, and you seem it. What I'm showing you by looking at this, I'm showing you that the 52.56 is only $1, because these are bid. Right? These are better bid and relative to this one. So you can pay $1, and the max it could be worth is $4. Okay, the max it could be worth is $4. You paid $1, so you can make 3 to 1. 3 to 1 is not a bad bet, just to throw a flyer, and you reduce your cost from a 1 lot from 178 to $100. You see that? You see that difference? Now,
yes.
What happens? It could go to 65 for whatever reason, next week they make an announcement prior to earnings. I don't think that they will, but maybe they do. Or maybe Biden's announcement today gets it rocking and rolling and it goes up to 60 or whatever reason. You can only make that $4. Okay. You can only make that $4, but you've already made some money coming from 50 all the way up. So you've made about $4 or $5 on the trade already. Here you can only make, you can only make that other $3 because it's only going to be worth $4. Even if it goes to 100, I like using the extremes. If the stock goes to 100 and you're like, oh my God, I got this call spread, the max it could be worth is $4. You paid $1, so you're going to make your 3 to 1.
Mm-hmm.
Okay. The way you got to look at it, and again in step 7, I show you how to think about buying the call versus buying the call spread. Buying the call, so you either on the one hand pay 175, or on the other hand you're gonna for the outright call, which means if it goes to 100, the option is gonna be worth $48, which is a home run. Obviously, $100 is half of a pipe dream, but $52 to $100 is obviously a big move. But I'm just telling you what, on an extreme level, it's $48, and that would be worth a lot. But if you're either going to buy that call or you're going to buy the 52-56 call spread for $1. It's one or the other. You have to decide which one's better for you. Usually these call spreads I like after you've made some money. If you have a one lot and you've made some money and you want to take it, it goes from 2 to 10 or 2 to 8, and you say I want to take out my 8 and I want to put in $1 and not look at it because that's sort of my trailing stop, and I'm looking for a big move, then that's good. That's fair way to look at it. I like the play. I'm getting a lot of those questions on Johnny John as well.
Mm-hmm, mm-hmm.
Mm-hmm. We've had a nice move in Johnny John. Frankly, the announcement was good. They left it open for the results coming next month or at the end of this month. They talked about, there's been talk, I guess, about production problems. Johnny John said it was okay. So how do you play this one, right? We're going now into expiration. And so you have to be out by tomorrow afternoon. Otherwise you have to exercise. We were along the 150 calls, which are parity, which is 1160 right now, 1157. So how do you play that? Well, you can either sell the options, okay, or you can actually sell the stock short in an exercise if you have the capital. Now, most people don't want to sell the stock, but you can then sell the option. Now, you still like the stock. Many people say, but I still like the stock. I still like where it's going. I don't think it's reached its peak. How do I get back involved? I would say, well, they're telling you that it's going to take the next couple of weeks, maybe a month. So then you can look at something like February options and do the same dance as the GME, right? In the February options, you're looking at maybe like the 165s. We're trading 162, so maybe the 165s, 175s, and you want to look to see how that's priced. That's 2.5. So 2.5, the most it can be worth, Marco, is how much? 165, 175, 10. Mm-hmm. That's the most it could be worth. You're going to pay 2.5, so you're going to get 3 to 1 on your money. Okay, so that means if it goes to 175, you're going to make 300%. Okay. But the stock's already gone from 152 to 162. Can it get to where's my chart? Can it get to 175? When I first looked at Johnny John, I think the idea was that it would get to, we're looking for 165, 166. But if I'm looking at, let me broaden this out and okay. So I broadened this out. So if I just look at sort of, this was resistance, right? You could just eyeball it. You had this sort of what looks like a pretty cool formation, almost like a reverse head and shoulders, but you have this low, let's just call it 130, right? Somewhere around here, 130, 134, sorry. So 154, 134, that's $20. Then you know what? I believe in sort of symmetry. I'm a guy that believes in symmetry. And so, if it went down $20, then I'm just going to add $20 to 154. That's 174, which is kind of the put spread, the call spread that you're looking at, right? So can it get there on great data and good production? And I mean, I don't know. You tell me if you have to get a vaccine, are you going to go for 2 shots or are you going to go for 1? Me personally, I go for 1. You know, I don't want to go first. I don't want to go to the doctors twice to go, to go get the shot. And second of all, it's just easier, right? It's just
Right. It's a hassle.
It's a hassle.
Right.
So just because it's a hassle and Americans don't like, and maybe people around the world, just in humans, don't like to be hassled, they go for 1. So, so that's that. That's what I would say. It's like, when you want to stay long, when you've already taken out in Johnny John, we've taken out $10 on the stock, and now we're looking for another 15. So maybe you want to take that $10 off, because if you see something like, Pfizer, after Pfizer announced their drug, you see what happened. It just went straight down. So the fact that it can't go back to where it started from 37 to 43, 43 down to 37, it could, and nobody knows exactly what it could, what could happen. So I guess this was the first announcement, and then there was some announcement here, I guess the actual data. But the point is that these things can reverse very quickly. And I would say that maybe this was the first and this was Moderna, but at some point they all went down. But the point is that it could go down. That's what I'm trying to say. This Johnny John could go down. There's no reason why it can't. But maybe it goes to 170 first or whatever, but you're going to play it the same way, right? You're going to have a call spread. You're going to pay 250. If it goes to 5, remember, it could only go to 300%. So if it goes from, you make 100%, now you have 2, it can only go to 4. So now you have 2 and it can only be worth 4. So now it's a 50-50 coin flip. So that's where spreads become a little bit tricky. You might want to take it off a little bit earlier than just waiting, because you start having, again, it's risk reward. So it goes from 1 to 2, 1 to make 3 sounds good if there's a gap, but if it's just trickling higher, then it goes to 2. Now you have 2 to make 2, and you got to actually wait to expiration to make that 2. So it's really like 2 to make 180, because you're never going to really get out of that for cheap. So for 0, so it's a little bit less than, it's a coin flip, and you're not getting paid for it. So, again, it's always the risk reward of what you have on that particular day. Okay.
Okay, cool.
Good. Let's talk about the semis. I mean, these
Yes.
things are the new, they're starting to heat up. There's a lot of activity in the semis. We saw Taiwan semi, it looked to me like the guy might have been short. He still might have been a short. I don't know why, if he knew that earnings were going to be that good, if they wanted to play earnings, why buy the January 29th options? It was my question. It just seemed odd. And why buy the 140s? You could see today that this guy actually, I guess the numbers they love the numbers, but it opened up just a little bit higher and then just rallied all the way up. So it might be a short squeeze too, but the stock just ballooned higher. It's hard to move this stock as well, $500 billion company. But if you look at the ones that he bought yesterday, we're assuming he bought from what we looked at. It looks like today he got out of them. So you see that these guys, he paid $1, 80 cents, 90 cents, $1, and he basically sold them at around 2 and change. So he took 100%. But the problem I have with that trade is that if you were actually just playing earnings, why did you buy the Jan 29s? Why not just buy the Jan 15s? And if you had to read on the earnings, just buy the Jan 15s. And, they're basically parity now. The 122s, where were the 122s? I had them yesterday. The 120s were, let's call it $2. The 125s were $2 on the day he bought those. So, you're talking about 300 to 500% returns on the January options when they had the earnings, versus the Jan 29s way up there, to then sell them out at one, like to make 100%. If that was my client and I asked them, what are you thinking? Why? Oh, I like it for an earnings play. I would have not said the 140 calls for, it was just way too far out. If it was just earnings, then just play earnings. I think it's going to actually run after earnings. Okay, but then that doesn't make sense because he just sold them here. So this trade was a little odd, and it might be a spread. I don't know what he did here, but the trade was a little odd to buy those. He made 100, 150%. I can't argue with the guy. You made money, great. But I would call that guy and say, if the thought was earnings and they were going to do this, why would you buy the 29s to then sell them 2 days later to take 100% profit? Where if you were right, you would have made 3, 4, 500%.
Mm-hmm.
Right. And so anyway, that I just wanted to say, I wanted to go back to this one. This one looks like now people just pairing up a lot of volume. The Intel I saw today was still going. This one is still going as far as the stock here, traded as high as, I guess 60 is the next wall. We're seeing volume. I mean, the 61's trading here, and this is all, probably day trading as it was up today, and people trading that. I guess you got the earnings coming up next week. I think, a lot of times what happens is when a new CEO comes in, they call it the kitchen sink quarter, where basically they allow everything bad, because the CEO doesn't step in and doesn't want to step into a situation where everything was very high, marked very high, and now he walks in and he's got to walk everything down. So what Wall Street usually does is they give them this pass on earnings, on their first earnings call, and it might be a very bad number, but Wall Street won't care, because they know, okay, they took everything down so that this new CEO could look good over the next year, right? Because the CEO's, he's walking in there, he gets a chance to see the books before he gets hired. It's in his agreement. He's going to say, I need the earnings, to read this. I need us to walk down the numbers because I want to look good over the next year and a half.
Wow.
Does that make sense?
Yes.
So the new CEO leaves. They had the numbers wherever they had them. Not that they're cooking the books. They're just like projecting here, projecting there. The new CEO says, no, I want to get estimates. I want to get people's estimates to be where I want them to be, because over the next 2 years, I have to manage those expectations to all my clients and all my customers that came in to buy the stock from me. So they're going to know that I'm here working for them, and the numbers that I'm showing them, because those numbers reflect the CEO. So the numbers that I'm showing them are real. They're my numbers. I vouch for them. And that's where we're going with the stock. I would have to say that the options activity is active. Okay. You even see longer term options, because people are saying, you know what, I like this guy and I just want to get involved here with him. Right. And this stock maybe trades a lot higher because it's been suppressed for so long. So this is how the big money starts shifting, which by the way, you can get some clues by this thinking. But let's just look at the chart for 5 years. Intel hasn't done much, definitely in the 3 years. So is there room to run? Maybe if you get the right people behind you and they're going to start buying the stock because they believe in you. Yeah, this has a lot of room to kind of, start breaking the upper barriers. I would say over time, I think it's had its big move. People have been there. They have to eventually, some of these people are not long-term holders. They're in there for this big move. But then you got the big guys that they're going to be buying stock over time. So, Intel's got to prove itself, though. At the end of the day, Intel's got to prove itself. Is that fair?
Yeah.
Okay.
Fair.
One thing I would point out, though, is that, you look at its competitor, and it's interesting to see that the competitor is weak. AMD is down. You see Taiwan Semi up. Let's just see what Micron is doing. Micron is up. So semis are up, Micron's up, Taiwan Semi's up, Intel's up, and AMD is down. That should start signaling to you maybe something a lot bigger than what we had seen before. Maybe there's a bigger story, right? Let's think about this. We had seen call buying in AMD here, and here. And the stock was being sold at 97. Every time there was a potential breakout, the stock is being sold. The reason I didn't buy it was because and some of these things I generally try to wait when everybody's buying, and I want to see how it reacts. And when it sells off, it's harsh. They sell it off harsh. I don't like seeing these constant sell-offs here. It's telling me that there's, somebody doesn't want it to go above 97. Somebody wants to sell it. What I find interesting, and again, just connecting the dots, this is how it works. If somebody's long millions and millions of AMD, and then they hear that this Intel guy's coming over, this new VMware guy's coming over to Intel, and it's going to completely change the face of Intel over the next 18 months, 2 years, I think we want to start loading up a little bit on Intel. Well, then it would start to make sense that, let's just buy some calls just in case AMD keeps going. We'll have 2-3 months calls for the earnings, but we're going to start reducing our stock. Okay, so what we're seeing is the calls pop up here. And by the way, this is also the same time when AMD was starting to get bought, right? In the last couple of, I'm sorry, Intel in the last couple of weeks. So you have Intel call buying here, AMD call buying here as well. So you got both of them, but one of them, Intel, was to establish a position and to take it higher. The other one, AMD, might have been to risk reward the trade, to balance the portfolio, the risk reward on the AMD position. So this is where, again, we're at this big level, 90. I don't like the sharp move back down. I don't have a position in AMD. We don't have a position in AMD. I've been thinking about AMD. I've been watching AMD, but I wait, and I'm waiting till I see more excitement with volume, not just options. I want to see the volume, and I want, now that I see the Intel story, it just makes me wonder even more, is this a sell AMD a little bit, not get out? You know, I'm never trying to say to you, everybody's getting out of AMD. People love AMD. They think it's going up, but the risk reward in AMD here might be versus Intel might be, it might be better to own Intel here for the next 18 months than AMD. Not because AMD is bad, but maybe just reduce it. So if you had 40 million shares of AMD and 0 of Intel, then maybe you'd say, all right, Intel's getting this new guy. Let's buy some calls, establish a position. Let's buy a little bit of stock. You know, we'll build up Intel to 10 million shares. Doesn't have to be 40 to 10 million shares. And then it's half the stock of this. So maybe 20 million shares, which is a quarter position AMD. And what we'll do is we'll sell 25 million shares of AMD. So you're just switching money from Intel, from AMD towards Intel. And you're using AMD call options over the earnings periods just in case it goes up.
I see.
That's what it's starting to look like as more information comes in. So again, it's starting to think about and putting the pieces together that that AMD call buying, it has not been working, but maybe it's just a flyer for someone that's actually trying to get out of some AMD. And when these guys, you're talking about the big guys, when they're getting out of some AMD, you know, it's a lot of shares. It's a lot, right? That is the story, right? Forget about anything else. That becomes a story. Let's talk about, we had Intel, which is the other one, Micron.
Micron.
Anything going on in Micron?
There's been some action.
There is action on Micron. So Micron, again, we saw call buying. Volatility is down a little bit here. So let's just look to see what this is. Okay, so the 85s. You know, I would say that maybe someone's paring it down. You see, they were buying the 85s. You see how we talk about layering and people ask, how do you get out? How do you get out of these positions? And say, well, try to do 100%, try to do, you know, 175, 200, and then try to let the last leg run. You know, I want you to notice here that it looks like selling just by looking at it. Maybe it's a buy, I don't know, but I see the vol down, and we saw this buyer here before. We saw buyers here, you know, and you're starting to see like 7,000. That's about 25% probably of what they were buying, right? 25, 33%. They were buying, when we saw, I think it was 25,000 options. So that would be 33% of 25,000, 8,000 options, which happened to be the volume. So what I'm trying to show you essentially is that they're doing what I'm trying to show you proof that this is how the guys do it. They buy big positions, but they're not holding it to expiration for the whole thing. As the market moves in their favor, they'll take a little bit off. They'll just take a little bit off. There's always, you know, they're very much aware that the market goes up and down. And if it happens to go back down and they still think nothing's changed except the market's gone down 3%, and you see Micron trading 75, then you know what? Maybe they come back in and roll down the 2/3 of their 85s down to the 75s or the 80s or whatever they're going to do. But they adjust, right? Because the only thing that's different today than it was 2 weeks ago was that the market came off 3%, 4%. Why? Just because it's been up every day for the last 60 days. So these are sort of how you manage that risk reward instead of, you know, trading up and trading down and moving it around and moving this strike, selling that call, buy this call, do this, which a lot of people sort of talk about doing, especially when you're selling options. If you go listen to people say, well, how do you manage to sell options? Well, oh, you get here, you buy them back, then you go sell this one, and then it moves up, and then you buy. It's a lot of moving around, you know, a lot of moving around. And every time you move, you're crossing bid offer, and there's a little bit that you're giving up. I don't care if they say it's free. It's always a little bit that you're giving up. And so, what we're doing is we're sticking to the same strike and we're just peeling it off. And that way it's just a lot easier to manage. We're not trying to, what you did is great. you once you got out of the position, then you just got into another strike, and now you're going to focus on that strike. So you almost get the same thing, the same effect by moving the position down, then moving it back up, then moving it up more. You almost get the same effect just by selling a little bit and reducing the size of the position. Is that fair?
Yes, and of course the tool helps a lot, tremendously.
Of course,
doing that. Yes,
of course. You're just constantly, people ask me, which one should I buy? I say, go look. I built the tool to answer that question for you.
Right.
You know what I mean? Like I literally get hundreds in the course of weeks. I get hundreds of emails like which one to buy. Most of them I just have to, I just say I don't know. Like I built the tool to tell you. I built the tool to say I think it's going here. This is sort of my confidence level. So that's what I would say. That's what I do. That's what I'm looking at. I'm looking at Micron stock, where it could go, where it can't go. I'm actually thinking, can these things retreat a little bit or on a way back? Like what happens? Where does Micron go if the market's down 3%? Well, maybe it's 74, right around 72, 74. So I'm constantly thinking, what's the downside? What is it? I get people are thinking 90, 95, and I get that. But what is the downside? Something like AMD, one thing that I see here is, I look at this stuff, right? It's what's developing here. A little bit of a MACD diversion, a little bit of a RSI diversion here, right? You're going down here, and then over here you're going down here. Yet the stock it's going sideways, but it was trying to break out. So a little bit of that I see. And if I tell you what, if it breaks 90, this could easily trade $82, somewhere around 80, 82 to 85. Why? Because a lot of people are long here. A lot of people long here. And what's going to happen, it's going to trade 90. They're going to hold, and then they puke. It trades 82, 80, 83. Then maybe it goes up. Who knows? But I'm just telling you that this is a big level. This is not necessarily, I don't like this going down a lot. I'm trying to piece the puzzle together as it's happening, and I'm telling you my thoughts. Intel going up, bid, volumes, options, volumes, bid, and AMD, you got this big buyer just buying some $3 options, and everyone in the world is following, and it keeps breaking down at 97.5. I don't necessarily like that. So anyway, this makes sense. Okay,
cool.
Let's look. So that's Micron, Intel.
Next we have airlines, but before we do that, I just want to take a quick second and show something to the folks. So guys, if you go to the Options Geek website and you go here under products, you can find the Winning Picks ebook. That's a new ebook we launched, and it actually has 12 months worth of Felix's ideas written down. So 148 trading ideas, just like he sends them every 2 to 4 times a week in an email. You have 365 days of the year of Winning Picks ideas, so 148 ideas. A lot of them rage.
By the way, what about this, right? So a lot of people join and they ask me for, hey, can I go back and look at the library ideas? Listen, I have a policy. I only allow the last 3 ideas because I want people to look forward. Also, these things are so educational. It's so educational to read what my thoughts were and then to see it happen, right? Because once you understand that and you understand 3 steps, the foundation of what we're doing, you get so much more of the nuances, what we're talking about here. To see what I was saying in over a year on each trade, you're going to start seeing similar patterns and similar things, and it's going to sink in more. And again, I don't give it as a policy. If you signed up today and asked me for a trade from a month ago, maybe I'll do it. Maybe one time if you catch me in a good mood. But in general, I don't do it. And many people have asked me because they are educational. Some people think this is the most valuable part of Options Geek. So what I wanted to do was to say, you know what? I'm doing this podcast. I'd like people to understand what we're talking about. If they don't have the money to spend $400, I get it. It's not a problem. This is a $35 product. Plus you get a seminar that explains a heck of a lot. And I think it's well worth, having this as a library that you can go back and just read through the logic, the analysis, and then look at the chart, see what happened, see how you would have thought about it. Like walking through that process, which is what we're doing here every day. It's helpful. This is a process. It's muscle memory that we're trying to build, and it's important. And so there's all the traits, everything I was thinking for a year. Some of the big trades, some of the winners, some of the losers, a lot of losers. But now you're starting to understand sort of this peel, this getting in slowly, peeling out, sometimes getting it, there'll be a bunch of things. I also talk about the process. It's not just the ideas. I also talk about what we're looking for, questions you should be asking yourself when I'm looking at this stuff, all the different questions. It's impossible for me to remember, on every stock, on every, like, even when I'm looking right now, what I'm thinking. I just happen to see AMD versus Intel. I haven't seen that type of trade in a while where you're flipping like that. So, you're going to get tidbits on every idea because that's what I was thinking at that time. So I think it's extremely valuable. I think it's well worth $35 for sure. Okay.
Yes. Cool. All right. Thank you.
Let's
Felix.
talk about the airlines were actually, I did see yesterday. I saw JetBlue yesterday.
Yes.
I did,
I actually got in on one.
You did? Oh, good. I was looking at, I mean, honestly, I think people are waiting for a positive Johnny John, which they got to an extent. The stock's up. And so positive Johnny John vaccine should have lifted a lot of these stocks. One thing I'm concerned about the market is that you can see now that the vaccine announcements are not as powerful as they were, a month ago. So it's starting to lose its luster a little bit when you say, hey, there's a new vaccine. It's like, yeah, we heard that story. We got that. Market's up a little bit. So Johnny John, one shot, you would have thought market up, at least 1%, 2%. And you didn't see that. So I would just call that a sign, nothing more than just a sign. I would keep that in mind. But with that said, it just gets us closer and closer. If we think about normality and when that might be, it gets us closer and closer to going to live events, going to the bar, going to, a restaurant after work, whatever it is, to some level of normalcy. And part of that is travel. Part of that is, okay, it might be forever changed. It might be the seats might change the way it thinks, but people will be able to get on airplanes again freely and go someplace. And probably people are dying to go someplace. People, the minute it's open, it's people saying, you know what, I'm going on vacation for 2 weeks, leave me alone and sit on a beach. So, the airlines, I looked at it yesterday because at the end of the day, I did see some JetBlue. I was looking at all of them. You bought JetBlue? I like all of them. I got to tell you, they're as far as, I hate airlines long term. I just think that they bleed money and they're always in trouble. But, I'm looking at, let's just go to, again, open it up. So looking at this, just go back monthly, make it easier for me here. Okay, so stock had a run and then fell off here like a cliff and trying to come back. So normality is somewhere between 19 and 20 maybe, and people buying calls, and that's on a monthly. But here you can go back even just 1 year, and you would look and say, okay, something like JetBlue, where can it go? Clearly there's just short, right? I mean. Again, I'm going to tell you a million times, I'm not a CMT. I've just seen a million charts, and I like to keep things very, very simple. Listen, if you're good at the complicated and you can come up with, a graph that, looks like this, and, it's going like this, and then you say, you see, it's going up, Felix, look at all this stuff going on. If you can do that, great. I can't do that. I actually, call myself an idiot and just say, give me a straight line. How about that? Here, can you understand this? We had a large gap move down. Okay. It just eyeballing it, it kind of looks like 50% or close to 50% from wherever this top is down to here. So, but here, something happened here that people said, nah, we don't like it. And then again here, again here, again here. And now we're at the same space, the same spot. So you got to watch this level. Now, I do like this kind of flag here. Let's get out of some of this stuff. So I'll just make it easy. And a lot of these look the same, by the way. Airline is an airline is an airline. A lot of them look the same. So I do sort of like this. Here's a gap here. A little bit of a flag here. But we're not through yet. We're not through. And let's see how this plays out. But I'd also like to see more volume by the end of the day, right? That's when, volume, option volume is one thing. The big boys, they're trading the stock. So it's like a confirmation of the two. I'm looking for good options volume and good options volume and good stock volume. But people are setting up here and they're doing the same thing so that's JetBlue. I saw this last night. I saw the same thing in American Airlines. Very similar. This chart looked actually really, this is a steady decline. When you see a steady decline, you can think big seller, but you can also think, somebody's buying it. They're not letting it go down in a hurry, right? They're just sort of like they're long-term buyers, and somebody is sort of buying this. So you have this again, sort of looks like a flag, whatever. I don't know. Listen, I might say these things wrong. People crucify me. I don't care. I know what I see. Flag could either be, I guess, this. Somebody can teach me something. Either this is a flag or this is, something I look at too. So all the chartists out there, don't crucify me. Just tell me. You can tell me. You be the smart guy and tell me what I'm looking at. But I see this and I see a break. I saw yesterday it was trying to peak up. Again, though, I still would like to see some volume confirmation. I do see the MACD is trying to turn back up. And this doesn't look necessarily like a high to me. So you got Biden coming in. They're going to want to help the airlines. They're going to throw $2 trillion at the world. They can throw 100 billion at the airlines and say, here, just make things go back to normal in the airlines. Oh, what do you need? A restaurant? You need 100 billion, take 100 billion too. There's just so much money that's going to be thrown at this stuff that if they could sustain, they can be alive until it gets back to normal then, and have taken all that money probably for free, because the government is not very good at sort of wanting its money back. But even though that's what the public is going to want, then you got yourself a trade that these things could, when they start moving, right? You start looking at, Exxon and, the things, they just start moving. They hate them. And then all of a sudden they start breaking above, and then it's, they're gone free and it's hard to catch. So I don't know if the airlines are going to do that, but people are setting up here with calls in. I saw American Airlines yesterday, JetBlue, and they're popping up again. It's one of those things again, when they don't pop up for a while, I'm not seeing airlines, and then all of a sudden I see 2 days in a row American Airlines, JetBlue. Let's see if United Airlines is in there. UAL is in there now. Let's see. What's the other one? Delta.
Yep.
Delta. Let's see.
DAL. Yep.
DAL. There's Delta. So there they go. So the airlines are here. It looks like they're active again. Usually I haven't seen them that much. And so that's something to watch, because again, are we getting to normal, or is this, is part of the speech going to be that the airline business gets their money, or gets the money they need to stay afloat, and these stocks should be 20% higher? Maybe. I don't know. I haven't read the speech, but somebody seems like they have. Somebody's got that speech in hand and setting up in different spots. So who knows? I'll leave that at that. So that's the airlines.
Nice.
As far as, let's just take one look at the which ones did you buy in JetBlue?
JBLU, let me tell you right now, actually. I think it was February's 19th. Yeah, maybe those are the ones.
February's right here.
Let me just log in and see. February $16 calls in February.
16th?
February 19th.
February 19th, so the 16th. So the stock's up 89 cents. You're doing good there today.
Yep.
So the 16th here. Let's just see right now.
I got them at 84 cents. Now they're $1. So
20. So right now, you see how, so when you have the position, obviously the price goes up, and so to pay that, the amount goes up as well, the target's price. So that, what'd you pay for this?
84 cents.
Oh, 84 cents. So you're close to 100%. So you would start thinking, obviously, what do you have? One?
Wait, it says here in my app that it's $1. Add $1 now. So
At $1. Oh, I'm looking at American Airlines. Sorry.
Oh, okay.
That would have been nice.
Yeah. They're at $1. I paid 84 cents.
JetBlue, February. Sorry about that, Marco.
No
Okay,
worries.
so we're looking at
JetBlue
16s. Gotcha. So these right here, and they're at $1. What did the guy pay yesterday? Probably around 60 cents. So maybe he even took some off here too. Just to take some off. It looks like he might have. Let's see here. No, actually, it looks like he bought some over here. See, let's just see. 63. What did he pay here? Yeah, he actually could have been that he sold them. Could have been that he sold them right on the open. Nah, I would say 931, 87, 90, 91.
So since today, I've only seen it go up.
Yeah, it could have been that he bought these early in the morning. The VAR was up. I'm not sure. I don't have full confidence, but I will say that they're buying these, and right now, in order to sort of pay $1, just call it 20. In order to pay $1, you'd have to be thinking somewhere around sort of 18 and a quarter, 19. For a big guy to be wanting to get excited about this, he's got to be thinking 18, 19 bucks. 18, 19 bucks. So 18, $19 is obviously a break. Let's go back to JetBlue. Yesterday, it was probably 18, a solid 18,
Yes.
which would be just, well, there it goes. So can it get there? Sure. It's the highs. They're playing good announcement, get some momentum back in this. Market's up, get some momentum. Can it trade 18? We just said 18, 19, and there's the high. Of course, it can get there. And of course, it's break this. It can go right there. So that's what they're playing. They're buying the 16s to play 18, 19. Maybe they get lucky. They trade 20, 21. But that's what they're playing. Fair enough? Good?
Fair enough. Cool.
All right. Awesome.
All right. So we got some UA from the audience. And
good. What do we got?
One interesting one from, I think it was Lewis. He said NAVI, NAVI.
Isn't it like from the movie? What's that movie? Cameron movie? The Navis?
Perhaps. It's
what's his
he's looking at the earnings.
Avatar. The Avatar. Is it the Navis? Okay. What is he on? Anyway.
Yeah.
I just remember. That's why I remembered. February 19th.
12 and a half.
Wow. Okay. Yeah.
Look at they're just like they're stranded by themselves. The volume. Look, it's crazy. Yeah.
What is this?
Oh yeah, he told me it's about they're I think servicing student loans, something like that. Servicing, collecting student loans.
So that means that maybe the government's going to pay.
Right.
Maybe the government pays. So yeah, I see what's going on. Okay, I like the story. It's clearly a buyer. I'd have to look at it more, but yeah, it looks like it's
very good.
Let's just see how it's buying. 45 40. So you see this again. What I want to show you is if you look at the data, it's minute by minute by minute by minute by minute. That is an institutional buyer, and he's on a machine, and he doesn't care so much about IV. Okay, he doesn't care so much about IV. IV started at 48, and you see it's already 73. He doesn't care about IV. What he cares about is the price. He's willing to pay X, which we don't know, but he's paid up to 65. This thing started where? Look at this thing. It started at 20, 25, 30 cents, 41 cents, 44. Now he's trading it at 90. So looks interesting. Lewis, you get a gold star. It's really interesting. I'd have to, it looks like a little bit of a breakout here too on the stock, 11 to 12. Let's just look at the bigger thing. NAVI.
Yeah, as I said that, it popped up. I was like,
NAVI. Okay, nice. I like it. Boom. And look at that. And look where it could possibly go, right? If you go back a little bit in time. Let's go back here. Okay, 13 and a half. Let's go back a little bit longer. Sorry.
Let's go back 5 years.
I don't know what this is, but okay. So hasn't done much, right? Hasn't done much. NAVI and Corp. What you would do here. So everybody.
What's the target there? 16.
Yeah. So here, let's just look at what this guy's looking at first. Okay. So he's buying these, the 12 and a halves, which is sort of right where we're thinking he should be. And I'm looking at 1482. So to try to figure out what he's looking at the very least, he's got to be looking at 15 at the very least. Okay. At the very least, he's thinking 15. So then I'm thinking, well, can it get to 15 and 14 and a half, 15? Let's throw in 14 and a half in there. Okay. It's right there too. So can it get to the highs, 14 and a half? And the answer is, yeah, it could. I mean, this is right where it was high here. This is 14 and a quarter here, and it's 14 and a half here. So someone is looking for this move up here, and he's paying. It's interesting. He just doesn't care the vol. That's it is proof. There's proof that the guy does not care about volatility. He just pays it. He's paying every minute. He just keeps paying and buying more. And he doesn't care about vol. So for all those people that, you want to understand and you don't believe me that the big guys don't care about vol, here's a perfect example, right? He's paying, the vol yesterday was 48. He didn't care. He came in and he bought every minute. he started buying, and he started paying a higher vol every minute. And he was buying because he just wants to accumulate as many options as he wants to accumulate. And that's it. And if he's going to pay 80 cents, he pays 80 cents, whether it's 1,000 vol, whether it's 20 vol, whether it's wherever it is, he's looking at it and saying, okay, that's fine. It could be whatever vol you want. I just want to pay 80 cents on average, or 70 cents or 60 cents, or whatever his average is, and the machine is going to take it. So he doesn't care about implied volatility. And that's why you see implied volatility go up. Now, in some instances, okay, he doesn't care about implied volatility. That doesn't always mean we don't care, right? We can try to be smart about it. And what will happen is that if nothing happens in NAVI now, if you're telling me it's student loans, there might be a big move tomorrow. So that's why he's coming in to buy some of the stuff today. But if nothing happens over the next 2 days, and maybe the stock trades from 12.12 to 11.5 back down a little bit, just because it's up $1.20, because he's buying all these calls. By the way, he's buying 30-something thousand calls. That's okay. It does trade that big. I didn't think it was going to be a stock that traded this big, but it does trade this big. But it's 7.2 million shares. He's buying probably through those calls. It's almost a 40 delta. So he's buying 1.5 million shares of that. So 1.5 of this 7.2 million shares is this guy, is the options trade.
Wow.
Okay, so it's a decent chunk. It's coming from the options. Now, I guess I think it's very interesting. The fact that he's coming in today, and you're telling me it's about student loans, and Biden's talking about his plan, and he might mention, and by the way, we'll pay the student loans for you. Who knows? I have no idea, but maybe somebody knows something here, and that's why they're playing it for today. And once people find the story, what are they going to do tomorrow? They're going to look for all the student loan names, and I think Sally Mae might be one. I think, Mark, if you're out there, I think you mentioned that yesterday. I did look at it briefly. I didn't. The options. The unusual options weren't something that I thought it might have been closing, but maybe there's a play there. There's certainly something that people are looking at in this student loan, because it's a big problem. Student loans are a massive, massive, massive problem in the United States. And frankly, that leads to a whole nother discussion about where education is going and how it's going to look, which I can go on a rant for that for another hour, but I won't. But yeah, so there's something there. I like it. I think that's a great look. Someone's buying. They don't care about vol. They don't care. They just care about price. They want to be in it. By the end of the day, I think it's great. So
cool. Awesome. Great. I have one more set. It's actually a set, and it kind of goes on to our story that we talked about long term. So I think Priya found these, and it's NIO plug and blink, BLNK, and there's some 2022s and 2023s volume. They are high premium, but there's like 2, 3, 4, 5,000 volume in there.
Yeah.
So if you want to take a look at it.
Let's look at it. Hold on one second. Just want to see. So stocks obviously had a big run. I know Blink. This is one of these names that were popping up for the last 2 months. It was here when it started popping up. Okay, so it's 53. It's up here now. Okay, let's take a look. Let's take a look at Blink.
Blink, and in particular, January 23.
Which one?
January 2023. Go all the way down.
Oh, January 2023. Wow. Okay.
And it's 80 calls.
Huh. Okay.
You see them?
Yeah. No, I see them. That's a lot of money there. That's a lot of money. Did they buy them? Let's see if they bought them here. 3,000 on the offer. 49.93 reference. So that means it was right here, right around here. Okay. And they paid 21.
And it's interesting that all three are around the same day, and all three are in EV. So
okay, what I would say is, on all of these names right now, on all these EV names, I would say that I think there's a lot. This smells like it does. It's clearly long term, right? They don't know where it's going. They're not telling you they know where it's going in the next 2 weeks. They're basically saying, we like the stock. We think it could be a triple, right? So it could go from 50 to. They're not paying $22, $23 on an 80 strike call unless this says 225. I mean, it's just I can maybe for one of these guys I'll lower it down to 150, 180 because I know how they think. And if it's risk reward, it could be just a 150, meaning that they think that if they've rolled this stock from 10 to 50, okay, remember, there's a lot of volume, just so you could see it. There's a lot of volume in December. So let's look at it. Hold on. Where am I? I want to do this. I just want to look at the last 4 months, 5 months. Okay, there is a lot of volume right here. Okay, so we're talking about an average price from 10 to 32. There's a lot of volume. Okay, there's a lot of volume here. Okay, on an up day, probably a buy. So this was, you're talking about $8. So $8.50. You're talking about probably a $15 average price. Okay, $15 average price. Marco, you bought 1 million shares. You're lucky enough to buy 1 million shares at $15. You have $15 million. $15 million turns into $53 million. Okay, so you just made $38 million. You're very much aware that this stock could easily go back to $25. Okay, anything that goes from 10 to 53 in 2 months, could go back down to 25. Okay, it's not like you're not aware of that, but you also have a lot of money on the table now. You only had 15. You're 38 million in the green. You're up 38 million bucks. You know what? Is there a possibility that you can just say, if this keeps going, if this is a real winner, we believe it's a real winner, it's trading 150, 200. If the market wants to come off here, maybe we want to just get into these. We could spend $22, and that's our bet, right? That is our bet in Blink, and we'd love it if it came back to 25. So they're sort of looking at, I can have $22 options for 1 year, and if the market does come off and this trades 25, that's $27 down. I've already done well. I've already got out of 1 million shares. I saved myself 27 million bucks. Now my 80 calls are probably going to be only 6, 7. So I lost 15 million there, but the risk reward is in my favor. So I always worry on these types of, there's a lot of positioning going around. People have made an enormous amount of money in EV names, and the big guys in this scenario, in where we are today, I am sure they're thinking about, how do I stay long, but how do I take my money off the table? So when you see these big call buyers here, and everybody, now the average investor is not thinking this way. All they see, everybody's looking at your way. They're buying these calls and these calls and these calls, and they're not thinking the rationale behind the trade is, we think it's going up, and if this happens, and it could explode, and it could go up to 300%. But the reality is that I just made 50 million bucks, and I just want to get my money off the table. And if it goes up, it goes up. And there's a lot of that going on right now. I'm sure of it. It has to be. Anything goes from 10 to 50, there has to be that thinking. So I think it's very, very, very important. I think it's very important to consider these things and understand them, but keep digging. Why is that a good buy right now? If somebody woke up today and I'm looking at the 80 calls for $22, okay, in 1 year it's got to triple. Why is it going to triple? Let's dig into the story again. Is the battery that good? Maybe it is the battery that's going to survive. So these are the things that you should start thinking about, and these are the things that I think are important questions to ask yourself.
Cool. Okay.
All right. Anything else? One more? Or
yeah, there's NIO and plug, so you can pick one. NIO or plug, which one you want.
NIO or plug? Gotta go with NIO. Plug is plug. By the way, did it come down a little bit yet? One day? Oh, it's almost down. Okay, so how about this? If you get a Biden announcement tomorrow and this thing breaks and it trades 55, then this would look to me a little bit like, this starts looking a little bit like the top of a mountain, right? You just went from 10 in 2 months. You went from 10 to 72. I'd be concerned that the shorts are starting to lick their chops and saying, give me a good number, give me a good whatever speech, have it trade up in the morning and then collapse. Like, tomorrow they're going to be all over that. This is, you see how this looks? Like, yes. Let's just look at the other mountain, right? We always got to talk about mountains, because this is perfect. It's starting to look a little bit like this. See that? That's one side of the mountain. And you see what I tell you? When it gets back to, it goes from 62, finds a floor 23, and then the shorts are thinking, all right, where can this go? 62, 22, that's 40. 40 plus 40 divided by 2 is 20, so 42. Okay, so somewhere around 42 is 50% of this move up, which is a Fibonacci number, and then it winds up hitting 40, but they're starting to short probably between 37 and 42 to give themselves some room all the way up to 50, right? And that's how the shorts play. So I mean, this is a mountain. Remember, forget about what the stock is. This is how they all look. So this is, and they will all look like this. This right here is the definition of momentum. So this is one side of the mountain. Now it's on the other side, Fubo. So the shorts are on this. And then you have, what was the stock? NIO. No, Plug. Well, I get it. They have, it's Momo right now. They got a couple of agreements, but this has got to hold this level. You break this level sharply and you can get 55. And then the shorts are thinking, that's it. This was the mountain. It's going to trade back to 35, 37. I'll buy it here. So, they came out. They waited, the world waited. They waited till the Electoral College was done for Trump to say he was going to leave. And then all of a sudden, the next day, they announced one in Korea. 2 days later, they announced one, the Renault in France. So the world has been waiting. They're getting involved, and they will be involved. But that's part of this story here. Now we got some confirmation, and then it ripped. But there's a lot of what we're seeing, these new agreements, there's a lot baked into it already. So we've got to be a little bit careful. That's what I'm saying is in the Plug. I want to see how everything reacts tomorrow. I'm concerned about the market for next week and the next 2 weeks, call it. That's where my concern is. And that's why I don't want to be reaching too much here. But NIO is one of these where it broke out here 57.5. Decent volume here. It's still going down from, it reached 67. Let's see where it stops first. Tell me where it's going to stop, and then I'll tell you. It's not like we're not day trading this thing. We're trying to figure out. Show me where it stops. Show me where the next buyer walks in. If it comes off tomorrow and trades 55, and a buyer steps in right around here, and it trades from 55 back to 60, now you got your range 67, 55 because buyer stepped in, and that's sort of the way you play it. Right. And if you still believe in the story, which still looks an interesting story. However, again, you want to look at a MACD diversion. You have a high here. This was a high, but now the MACD is not showing a high. If it turns, and that could make it come off. But the RSI is starting to show here was a high. It is climbing, but this high is not as high as over here. So a little bit of divergence in these things. So I would be careful. I'd start looking for. We're long CGC. I mean, look at that stock. I mean, you see what's going on here? You see that this is making a high. When it stops making a high, tell me where that MACD is. If the MACD is not higher than here, I might get a little worried. I want to see it hold and watch the MACD come down and find its own new level. But this is a high. Here's a high MACD. The stock came down. It was the first high. This rollover didn't look good. We get long right around here. And now we're riding this thing. And again, the marijuana story, the cannabis story, you don't even hear too much about it. It's all energy. But at some point, this woman, our new incoming vice president, is going to push her agenda. And part of her agenda is this act where the banks will be able to hold these cannabis stocks, which means BlackRock can get in. And let me tell you, if that happens, then BlackRock's in, and then these become the new EV stocks over 2021. So these are the big announcements I'm waiting for. But before even that happens, just the potential, and you're starting to see these things run. They haven't even began talking about cannabis. Unless you see it all over. I don't really see that much about cannabis. I know a couple of articles. I'm talking about CNBC. There's 15 articles about EV every single hour. Everybody's competing for the next article. When you start seeing that in cannabis again, this thing trades, this could be 45, 50. Or the little guys, Tilray's. How's Tilray doing today? This is a smaller one. It's in a deal, there. Like you see how these things, this is an anticipation. This is sort of the anticipation of them switching from maybe EV to like the next thing. And maybe the next thing is student loans. Maybe the next thing is, which is what NAVI is. But we're going to hear a lot tonight about his plan. And tomorrow they're going to dissect it. And over the weekend, they're going to say, and there's going to be winners. There's going to be losers. And we're going to start seeing what he believes. Maybe it's all winners because he's got so much money. He's just going to pour it out and give it to everybody.
Right.
Who knows? I don't know. So, but this is how you know, catching a bigger trend is probably an easier idea than trying to catch the next day. I don't think anybody knows the next day. So you want to leave it off at that? We'll leave it off that. We'll come back. There's no tomorrow. So have a good weekend.
Yes.
Have a big long weekend. It's Monday. We're not here on Monday. I can't do this every day. And so we have a vacation Monday, and then we'll see everyone on Tuesday.
Thank you, everybody.
All right,
and stay good. All right.
Be good. Bye.